Well, welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. My guest this segment is Nick Santiago, President and CEO of In the Money Stocks. Nick, thanks for coming back on the show.
Great to be back, Michael. Thank you for having me.
My pleasure. Okay, what are we going to knock it out of the park with today?
Well, I want to talk a little bit about copper, maybe a little bit about the JJC first.
Okay, let's do it.
One thing I'm noticing about the JJC is, we have a big dollar decline today and not a very good reaction in the copper markets. And that is always a little bit of an alert sign to me that you want to be careful in the markets whenever you see, copper really not soaring or surging from a big dollar decline. Normally dollar down commodities will all surge. Gold is having a very good reaction today. You're getting a nice reaction in gold, a decent little reaction in silver. But copper, I'm not so thrilled about that reaction today. And I think it could be a little bit of a warning sign for us going forward. Overall, I expect these markets to probably hang in there, for a few more days. We did have a sharp sell-off on a pickup in volume in the S&P 500 a couple days ago. But overall, I think these markets probably hang in there to the middle of next week. And then I think, traders should start to get a little bit more cautious. And it's also an options expiration week. So I'm starting to see some signs out there, even today, which, is a decent little rally day on really no volume. I guess they're rejoicing over Greece or the job number tomorrow that is expected to be pretty good. But when I see the reaction in copper this lackluster and stocks like Freeport-McMoRan are bouncing up a little bit today, but they've been really ugly chart patterns. You got to put your antennas up and be a little bit worried now.
Okay, are you taking positions now, or you're starting to kind of like average into your position, or you're waiting for another couple of days, because that's what you're saying, a few more days on this?
Yeah, I'm going to wait till the middle of next week, and I'll probably start inching into some short positions, provided the pattern on the chart looks right. But overall, since the beginning of, the end of the month, end of February, I've already been in conservation mode. So I'm really just buying my time here. We've had a couple of short positions out there that have played out decently already, and now I think it's just a more of a waiting game than anything else.
Okay, let's take a second and talk about strategy on what you think is going to happen next. How are you thinking you're going to maneuver your strategy for the optimum return on the trade?
Well, if this market starts to sell off, I am under that in that camp that this rally is just about over.
Now let's make sure which one. Copper, stocks, which
everything.
One? Okay.
Everything. The S&P 500, any commodity bounce. Oil is the wild card there because of the geopolitical events. Plus, if the dollar sells off, obviously oil will ultimately trade higher. That's a real catalyst for energy prices being as high as they are. But even if you look at ExxonMobil today, you'll see that stock is down when everything else is up. Exxon is the leader of the energy stocks, second largest market cap in the world. So there's definitely some warning signs out there. But the way you want to position yourself is you want to look at stocks that are weak already. If you're a lion or a tiger in the jungle, you're not looking to pick on the strongest thing out there. So, I'm not looking at stocks that are making new 52-week highs and new all-time highs. I'm looking at stocks that are now trading below the 50 moving average or maybe trading below the 200 moving average, putting in a little bit of a sideways base off of a little bit of a drop. And those are the stocks that I think you need to focus on in order to make money on any sort of downdraft that I believe is coming. So you want to pick on the weak, not so much the strong. Once the strong stocks sell off and they become weak stocks, then you could pick on those stocks. But right now, you pick on stocks that are showing weak relative strengths, showing that they can't get above their 200-day moving average, can't get above their 50-day moving average. Those are the ones that are going to give you the best and the fastest moves on any initial drop in this market.
Okay. Well, they need to go to your webinar to figure out which particular ones you're talking about, right?
Yeah, well, I'll give them a few right now, Michael.
Okay,
I always like to give your audience a taste of what we're doing. And, you're going to watch for, bases in stocks like Freeport-Mac, Southern Copper Corp, SCCO, Rio Tinto, RIO, BHP Billiton, Tech Resources, TCK, Cleveland Cliffs, CLF. All those stocks are up today. They should be up for the next few days, maybe even a week's time. But watch for the pattern in those stocks. They're all candidates to move significantly lower.
Okay, and when you say significantly lower, let's talk about S&P terms. How much lower do you think we may move?
Well, if the S&P starts to top out right now, it won't be a giant move down. You'd probably test 1,300, then you'll test 1,250. It's going to be a succession of lower tops, especially in the first leg. If we start to roll over, what generally happens is you have dip buyers now out there. They're conditioned to buy every support level, right? You have Ben Bernanke every day talking about QE3. If things were so good, this guy wouldn't have the Fed funds rate at 0% since December 2008. But every day he's dangling the carrot in front of traders' faces, talking about QE3. So you have to realize that, there are people out there, institutions out there, that are going to buy every pullback until the pullbacks fail. And that's when you start to see the bigger momentum. So in the beginning, if you go back and look at the May top last year, we didn't just drop. We started to fall sharper when it got to July and into August. We didn't and even September. But the May through June top, was a succession of lower tops.
Okay, so this 1,300, 1,250 area you're talking about on the S&Ps.
Well, right now, yeah, I would think 1,300 would be a very good support level. After that, yeah, around the 1,250, 1,260 area, that would be the daily chart, 200-day moving average. And then after that, you just continue to watch for pattern. But things are just starting to. I think the perfect storm is just starting to brew. Okay.
On that note, the perfect storm, because sometimes perfect storms can last for a while and sometimes they're very violent and short. Give me an idea what you're thinking this move's going to look like.
Well, the way I have it penciled in is I don't have my bull costume prepared to get it out of the laundromat until basically the end of the year. So, I think the market's in for some serious headwinds going forward. There'll be bounces. It's going to be tradable. It's going to be a good trader's year. If you're a good trader and you know how to pick up, buy the good support levels, you'll get good bounces in between, and then you'll get good shorting levels. I think it's going to be, the volatility, which has been dormant really throughout the first quarter of this year, is going to start to pick up.
Nick, it doesn't sound as though you're talking about a longer-term trend. It sounds as though you're talking about a range from where we are now down to the 1,250 area.
Well, in the beginning, but, just realize we're only in the month of March. From March, and then you go into April, May, June, July, August, September, that's a long period. So I always stay short-term at the moment, and then later on, once we start making lower tops, that's when you start to look for your bigger declines. But as I always tell my traders, a lot of times the first moves are the shallow moves, and that's what you got to watch for. We don't just collapse and crash. I mean, that always can happen, but I don't foresee that right now. Okay, well, that's a big question that a lot of people have on their mind because we've all lived through the flash crashes, and we wanted to, I'm just trying to figure out if that's what you're seeing, and you're saying no, it's a tradable move. It's a tradable move. That's at least what I have it for penciled in for 2012. You're going to get these nice moves down, you'll get some good bounces, and then you'll get some lower lows, and ultimately there'll be bounces there as well. And then in the latter part of the year, I believe you will get the QE3 that's been, dangled in front of us for so long, and that will cause a big inflation rally. Okay. All right. Now, next up, I've got a question because I'm looking at this QQQ. And this thing is right up there. You're talking about a distribution pattern over the next few days where you can actually take time to pull the trigger and be more comfortable about your trade. Are you seeing the same thing here with this QQQ? Well, the QQQs they've had a tremendous run, the NASDAQ 100. I believe that 66 level is going to be a pivotal spot on the triple Q. So everybody should watch that $66 area. We're about $1.15 away from it. I think that's going to be a very, very good resistance point. With the right pattern there, I will be looking to sell the triple Qs. Is there any companies, now we'll save this answer for the other side of the break, are there any companies in the triple Qs that you're feeling more comfortable about trading on this next trade? Apple. Okay, that's all right. Let's take a break right there, and we'll talk about that on the other side of these messages. All right, Nick?
All right, everybody, that was Nick. He's really got me good. That was a good one. Nick Santiago, President, CEO of In the Money Stocks. We'll be right back. Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. I guess this segment, Nick Santiago, President and CEO of In the Money Stocks. Nick, when we left the last segment, you really got me by surprise. Apple. Is that a big trade coming up for you?
I think it is. We actually sent out an alert already. I was looking at the 557.50 level. That was a mathematical calculation that I had put together for my traders, and Apple actually dipped a little sooner than we had expected. It went up basically up to the 548 level, and then it had a nice little pullback. Now it's getting back up there, so I'm going to have to readjust my level again. But this stock is so overcooked. It is, and I know the CEO's name is Steve Cook, but it is so overcooked. It's overdone, overblown, and it's like a mania right now. And traders, I would be running for the hills with Apple right now. And this thing needs a serious pullback. The monthly chart, Michael, take a look at the monthly chart and look how extended that market is. It's a great company. They make great products, but there's, the stock is actually priced for perfection. And with high energy prices and everything else that we're dealing with, this thing is not going to perform the way everybody thinks it's going to. Okay,
so are you going to be shorting this stock outright? Are you going to be going into buying puts that leaps, that give you some time to watch
extended puts, extended contracts? Yeah, well, I think the way to do it, and I'm looking, I'm very specific on my entries. As you know, I like to almost pick them to the penny,
right.
And I'm very precise. But I will probably be playing Apple via puts going out maybe into early midsummer.
Okay, all right. You're going to stay this year.
Yeah. I'm just, as I said, I'm looking for a big inflation rally at the end of the year.
What about strike prices?
Well, generally for me, I like to stay somewhat close to in the money. Maybe you go a little bit out of the money, so you could probably go with the 500s or maybe the 510, somewhere around there. But I generally like to stay somewhat in the money. This way, there's a lot of volume there. You don't have to worry about the activity if you're going to play it via puts. But also, if you want to just short it, this thing ultimately is speaking to us to come down to around the 477 and then ultimately the 450 level.
Okay, all right. You haven't put any trades on this thing yet.
Not this week. Not yet.
Okay, all right. That's good. They got to get into.
We have had some a couple weeks ago.
Okay, and all right. Well, let's move forward here. We've got some other questions that showed up real quick. I want to cover them before we get into option expiration and the dollar. We've got a guest in the shout box wanting me to ask you about the TLT and the cycle for that. You're looking for to buy at a 115 area. Is that still a good area for you?
No, you want to go lower now because the TLT now has tagged the 116 level multiple times. We've actually pierced through there. I would get interested in the TLT at a couple spots. I think right now, in the short term, over the next few days, if it got down to around 113, there's a spot there. And then ultimately, you're going to look at that 200-day moving average around 111, possibly even as low as the 110 level. The TLT has just been slowly drifting lower and lower, very, very subtly. But ultimately, I do think that it's building pressure to have, one more dynamic breakout in 2012.
Okay, and any price projection on that one more dynamic breakout?
Oh, I think that, if we get a real big move, you could probably look at, 126, 128, somewhere up there.
That's dynamic relative to where it is now.
Yes.
Okay, all right. And the timing on that, is it still waiting to be resolved?
Yeah, I wouldn't. There's no need to get in this right now. Even today, it's down $1.20. There's really no. It's all about getting the right level on this TLT. We have Operation Twist going on right now. It really is skewing things a little bit, but when you see the markets like this, you just got to wait on the premium chart pattern.
Okay, all right. We've got another question came out of Nevada, or actually a statement, and maybe you can comment on this. Is Apple's been holding up the markets. If it goes bye-bye, S&PX, or the S&P, are you thinking that that's going to be in a tandem move?
Yes.
Okay.
Yeah, you'll probably get. I mean, Apple's a big part of the S&P. It's a bigger part of the triple Qs, the Nasdaq 100, obviously. So Apple goes pretty much. Most other things will go as well. But in the beginning, you'll get some sector rotation, and as I said in the S&P 500, you're just not going to crash. You'll go down, and then you'll bounce a little bit, and then make another bearish pattern. That's exactly what I'm penciled into, or that's how I have it penciled in at this time.
Okay, well, let's talk about option expiration in the U.S. dollar index.
All right. Well, with options expiration coming up next week. Always a very, very pivotal time, and we've talked about this on your show. There'll be a lot of institutional game playing. So these institutions right now kind of have everybody in the bull mode. So I'm thinking, ultimately they pop this thing up pretty sharply into the first I think even the first 3 days of the week. That is where traders want to get real, real cautious, because these guys will flip the switch in a heartbeat. And, you have I'm sure you have a lot of new traders out there that are not aware of the games that get played during options expiration. And I just want to forewarn them what can take place. When
you say pop this thing, you're talking about the stock market.
Well, they'll probably lift the stock market into the early part of next week, yeah. And then they'll flip the switch, and then they'll sell it.
Okay. All right. What do you see coming up for the U.S. dollar market, though?
Well, the U.S. dollar has had just a tremendous, tremendous rally over the past week. Yesterday, it put in a little bit of a pause day, and today the dollar is getting annihilated to the downside. So what I'm going to watch for now is some kind of higher-low setup on that dollar. The dollar could make a nice higher-low setup, a good little pullback pattern. Then it has, upside probably to the 80.50 and then ultimately to the 82 level in the near term.
Okay. And when you say the 82 level, are you thinking that that's going to happen in a rapid period of time, or this thing could stretch out into the summer?
Well, I think 80.50 would be rapid. 82 would take a little bit of time. Spring.
Okay. All right. I just wanted to get your feeling on that. The other side of that is now not necessarily equal, but it does go hand in hand a lot, is this euro rally in the U.S. dollar. You're looking for lower prices in the euro, or are we going to be seeing something different?
Every rally in the dollar, you'll look for lower euro.
Okay.
The euro sold off pretty sharply since the 29th of February. Yesterday, I actually was looking for the euro to get down to that 130 level, which was the 50-day moving average on the euro, and it did not. It got a little bit of a pop, and today is a big day for the euro. The euro is making a pretty sizable move. But I will be looking for pattern on this euro to sell short, ultimately thinking that we are going to go down to the 129 quickly, 129 level, and then even down towards the 126, 125 ultimately.
Okay, yeah, that's what I'm curious about. I've got some cycle points, one being today, another one coming up in the middle of next week, the 13th, 14th area. Are you picking out any price levels where you think we're going to see some resistance on this euro rally?
Well, I mean, right now the big level obviously is going to be the 135, 130, 134.9.
Right.
That would still be, resistance, because that was where the breakdown took place. I'm not even sure it gets there, to be honest. So really, it's just about pattern at this point. If we could see a nice pattern, I think and the dollar's putting in the opposite pattern, dollar up, euro down. You just jump on board. I mean, ultimately, I think we're headed lower in this month.
Yeah, okay. Well, that's my question, though, in regards to the timing and the price on that. I got the price out of you. Do you have any timing models that you're looking at on the euro for this kind of a top? Or
I'm leaning towards the middle of next week.
Okay. All right. We're in agreement. Okay.
Yeah, I'm leaning towards the middle of next week. My biggest concern is really the pattern, though. If we get to that time period and the pattern is right, I think the stars will align, and then that thing will drop.
Okay. Let's talk about that for a second, and then I think that thing will drop. There is a lot of talk out there about this business in Europe really having a lot more punch to it than most people think there is. Do you see a tremendous low coming as we go into the summer months from here on the euro?
Yes. Yes, I think that I'm not ruling out 118, 117, 115 even for the euro. I think that's very, very possible.
Okay, that's what I wanted to get out of you in regards to that. So 115, 118. Okay, so big time trade on this euro.
Yeah. I mean, I think this is kind of the place to really be. I mean, all you got to do is go back and look at a monthly time frame. You'll see 3 lower highs, and could be setting up right now for another bearish pattern, and that takes us all the way down to 120 conservatively. So and with a little overshoot, 118, 115 cannot be ruled out.
There. At that point, are you thinking this is over? That's capitulation, or obviously we got to wait until it happens to really pass judgment. But from here, the way it looks, do you think that's the end of this? Maybe wave 5, so to speak.
Oh yeah, I'm going to put on a bull costume towards the latter part of this year, regardless. So I mean that's how I have it penciled in. So if we get down to that level, I'd be looking to buy the euro at that point.
Okay, well that's good enough for me for now.
For a trade, I mean this is for a trade. I'm not saying years out. Right. Believe me, years out, I have at least 3 more disasters in this market penciled in before the decade is over.
Well, you'll be back on the show before that happens.
Yes.
All right. Give everybody a way to get in contact with you, and if you've got an upcoming event, let them know about it now.
Yeah, come over to In the Money Stocks. Shoot us an email, or you can give us a call at 212-380-1578. Join our research center. Take a 7-day free trial to our intraday stock chat. Watch our screen, see what we do every day. Get all of our setups. Watch our nightly videos. You'll see everything that we're looking at, multiple markets, and we're good for all traders. Our methodology works on whether you're an intraday trader, a swing trader, or an investor. Come on over and give it a try.
Thanks, Nick. We'll talk to you next week.
Thank you for having me, Michael. Have a great day.
You too. Everybody, that was Nick Santiago, President and CEO of InTheMoneyStocks.com.